what I think is going to be the big catalyst is now we're bumping up against that period where the institutions that have bought the ETFs, they have to publicly disclose that. What it means is, oh, look at all of these institutions and these professional investors that have bought this thing. I better do my work on this because now I'm getting behind. So that risk of buying it has flipped to the risk of not buying it.
Last weekend, you were in Las Vegas at the MicroStrategy Bitcoin for Corporations. It looked like a great time. So do you have any takeaways for like any good conversations you saw, any good presentations you saw that you kind of walked away from and said, wow, this is really exciting?
Yeah, I mean, well, Michael's presentation on why Bitcoin is always it's a great 40 minutes or whatever. And
yeah.
He always brings up some extremely important points of from any angle you look at it, why Bitcoin is so important and why it's such an important, not just technology, but investment and asset class going forward, and ways that we can build on that. But the conference was, I mean, it was fantastic. It wasn't just the Bitcoin conference. It was actually the MicroStrategy conference. And we saw a bunch of salespeople, a bunch of clients there, a bunch of MicroStrategy clients. And, it's interesting to see that crossover and some of his employees coming over, some of the clients coming over, like guys from SAP or whatever. And they're really interested in what we're studying and what we're working on and why Bitcoin is so important. And so seeing that broaden out and having them understand why it's how it's becoming adopted institutionally is an important thing. You're starting to hear people accept that this is not going away. This is real. It has underlying value. It's being adopted and it's starting to be understood a little bit better. We have a long way to go, as you and I both know. We fight that battle every day, but it's encouraging. So,
yeah, it was kind of one of the biggest differences between this year and maybe the years prior was just some of the people from the institutions that were there, like the Fidelities as well as Citi. I think I saw somebody from Citi there.
mm-hmm.
I think a lot of the ETF issuers were kind of prominent speaking on stage. And so you come from the world of Wall Street. I mean, what are some of your conversations like now with the approval of these ETFs? Has the sentiment shifted in your conversations just, behind closed doors? Do people like agree that, hey, this thing's not going away? Or has the conversation shifted to more sophisticated questions about this like new asset class, let's say?
I think it has shifted. And in the way it's shifted, Sam, is that the conversation has gone from the hard line from most of the Wall Street institutional investors that, oh, Bitcoin doesn't have any underlying value, to, oh, this is interesting. And I can see why it's something interesting to trade. And so they're dipping their toe in it. But what's important about that is not that they understand it yet, because by and large, the people I talk to on Wall Street still don't understand it fully. And that's okay. It took me a long time too. There's a lot of mental resistance there when you're part of a system that benefits you so well that you're looking at something that's completely different. It's very difficult to get your head around. But that said, what's happening, and it's slow, the institutional adoption is happening, and you can see it in the ETFs. The ETFs make it super simple to buy these things and to buy Bitcoin, because prior to this, you really couldn't. If you were an institution, it was very difficult to buy Bitcoin. And the reason for that is just it was operational difficulties. It was career risk, it was personal risk for people, for investors and portfolio managers, to stick their head out, stick their neck out and say, I'll buy some of this, I'll take the risk, and I'll hold the keys or what. It was very difficult for them. And then you'd have to have a lot of approvals internally to get to the point where you could actually do that. Whereas now with the ETFs, it makes it very simple. You can buy it with the same broker on the same exchange that you normally do. That's regulated. It's not an unregulated exchange. You can settle it with the same prime broker as you always do. You don't have to have a different prime broker. You have it custodied with that prime broker and you DTC it, so it's all settled and held and in the same way as a regular investment. And it's marked the same way on the New York Stock Exchange time. So these questions are all settled, they're answered, and it makes it super simple. You just buy it just like any other stock. there's no margin on them right now, as we've come to learn, but it's the same exact thing. So it's kind of that risk of sticking your neck out and buying it early is shifting now. And so what you're seeing is people say, well, wait, what about this thing? And it's forcing them to do a little bit of work on it. And it's very easy for them to just go and get a small position. And we call that legging in. You leg into the trade, you get a small position, and it forces you. You say, well, it's in my portfolio now. Every day you pull up your portfolio, it's right there. It's staring you in the face. You don't have a choice, but you've got to look at it and say, do I want to add to this or take it off? Because right now it's just an annoyance. It's a 0.5% position. I got to do something with it. And so that's kind of where we're at, where you've got a few institutions. A lot of hedge funds are trading it. You've got a few institutions that are starting to get in there. But really, Sam, what I think is going to be the big catalyst is now we're bumping up against that period where the institutions that have bought the ETFs, they have to publicly disclose that. And we're going to start seeing some institutions publicly disclose it. And it's not because, and when they disclose it, that's not going to be like, oh, wow, look, the Cleveland Fireman Fund owns some Bitcoin. That's what it means is, oh, look at all of these institutions and these professional investors that have bought this thing. It's kind of turning where I better do my work on this, because now I'm getting behind. They all own this thing. I don't even know what it is. It's so that risk of buying it has flipped to the risk of not buying it. We're still in the stage, as you know, that people consider this thing in Wall Street and typically across the nation, they consider this thing a risk on asset. And it's going to take a while to change that. But this is the beginning of that. And that's what's really important about it.
Yeah, you're starting to see those filings start to trickle in. And there's a big one. Just they start to get a little bit bigger and bigger, it seems. We just had, was it Susquehanna? Is that how you pronounce it? $438 billion asset manager. They just exploded over $1 billion ETF position there. And you start to see like smaller ones, but you're starting to see bigger ones. And I think it's going to just continue to gain momentum. And we're going to continue to see it.